the biggest misconception is Solana does not have privacy. And I'm like, that's just not true.
That is Catherine Gu, head of product for digital assets at Solana and former leader on Visa's crypto team. She believes the real barrier to institutional adoption is not the technology, but the misunderstanding of what the chain can actually support, especially around privacy and compliance.
What Solana needs to work on are things like privacy and other guardrails in which institutions are looking for.
She explains that institutional capital will not move without clear guardrails, strong compliance standards, and enterprise-grade controls that support KYC, risk management, and operational oversight.
You want that money to be constantly circulated, to be constantly used, because only through transactions can you generate value through the network.
In this conversation, she breaks down why liquidity velocity matters more than vanity metrics, how real adoption is measured, and what must change for institutions to move from pilot programs to meaningful volume. By the end of this episode, you will understand what actually drives institutional blockchain adoption, what most people are getting wrong, and where digital asset infrastructure is heading next. I'm Alex Nwaka, and this is High Stakes. Welcome back to another episode of High Stakes. I'm your host, Alex Nwaka, and today I'm joined by Catherine Gu, who is the head of product for digital assets at Solana. Welcome, Catherine.
Thank you so much for having me, Alex.
Absolutely. So Catherine, you have a really sterling career. You are currently now leading product strategy for one of the fastest growing layer one blockchain ecosystems in the world. But prior to that, you were part of Visa's crypto team, working at the intersection of traditional finance and digital assets, and really helping shape how one of the largest global payment networks is approaching blockchain infrastructure. So I wanted to give you just a quick opportunity to maybe give folks a little bit on your background and again, how you got into the digital asset space and some of the sort of background on that in particular.
I mean, I did have a pretty interesting career trajectory, I would say, switched at several different turns because I started as a quant in a hedge fund based in London. So I was very much focused on, risk analysis, investment, hedge fund of the world. But I think at that time already, realizing data and coding matters a lot, going down the road, I decided to switch my career and also a location as well. I moved from the UK to the United States. So when I spent my 2 years doing a new master's degree at Stanford, I sort of jumped into the rabbit hole into crypto. Give all the full credit to my courses I took back in the days at Stanford, but it really changed my mind about what crypto is all about, because I think at the very beginning, as you might imagine, everyone think this is all speculative. It's kind of like a casino of the world, which to some extent is true, but it's not all there is to crypto, because what attracted me the most is really thinking about this is very much this new intersection between finance, macroeconomics, incentive mechanism design, and computer science, right? This is a new combination we've never seen before. And I happen to be just lucky enough to have, either taken classes in education or in my work experience, cross these different points that it makes a lot of sense for me. And that's why I just decided, I want to go all in on, crypto, despite at the time I was actually planning to do data science and AI, which in hindsight might also be a good option, but never doesn't really matter. So I think that's sort of what piqued my interest to begin with. And when I joined Visa, that was back in 2020, my first role was really, so I was the global head of CBDC. So I wouldn't say it's the most popular area to work on, especially you come from a DeFi and crypto background. But again, what's really interesting about it, you need to understand how institutions, especially the central banks and government, are thinking about it, because there's a very clear top-down approach of how they want to design the entire financial infrastructure. And I think 5 years or 6 years now, looking back, I think it actually helps a lot with my appreciation and understanding about this whole industry, because ultimately crypto and DeFi is not trying to replace financial ecosystem. It's really trying to be the new financial ecosystem by absorbing a lot of the traditional TradFis onto this new infrastructure. So it's never a either or situation. It's like both. We need to have both, and then we need to figure out how does it work. So having that appreciation about how existing system works, especially having worked in finance, but also working at Visa, understanding how payments work, have been extremely valuable for my current role.
Absolutely. And we at Validation Cloud got to know you a bit while you were at Visa, and now it was big news from our perspective when you said you were moving on to something new, and we were very excited when you ended up at Solana. Maybe a common question that you're getting since joining Solana. Obviously, you left one of the largest payment networks in the world for a layer one blockchain. Curious what drove the decision for you, just at a very high level. And then as a subsequent follow-up question, there's also a why Solana, versus other layer one networks or other types of projects in the digital asset ecosystem.
I think me personally, for my personal career, I wanna build and I wanna ship things. And I think Solana offers that really rare opportunity. And so it's really a timing and opportunity thing that it just at the right place for the right role. And hence I decided to jump into it because, what I'm passionate about is being in that founders mode. And at Visa, I've had that as well, especially for like 3 years, I was dedicated to building this thing called Visa Tokenized Asset Platform. It really felt like me within the organization with my team were like, the little startup trying to tackle through all the obstacles to get this thing out. So it was really fun because you get to learn a lot of things. And it's very rewarding when you see something comes out and there's like real client use cases. So I want to do that thing again. And I think Solana offers me a really great opportunity to do so. And I guess in terms of why Solana, I mean, firstly, I think just the overall macro environment has shifted dramatically, as we all know, back last year, right? So to me, I think it becomes a lot clearer in terms of the role that public blockchains will play down the road. Again, going back to the thing, there was the tension coming from the crypto, but there was also the tension coming from the government central bank perspective, like many years ago, right? Because they're just like, they don't want anything on the public chain. But I think having had many years of back and forth, I think the sort of perception and understanding knowledge base about what blockchain infrastructure is all about has improved dramatically. And I think increasingly institutions recognize that blockchain is kind of just the new sort of cloud, the next gen after cloud. What do you use? You use something like blockchain to reach distribution, resiliency, and performance, all of that. So that's kind of just macro environment wise. I think being on part of the public chain ecosystem makes a lot of sense. And I think what resonates me the most with respect to Solana is this caption of internet capital markets. Like I remember reading the Multicoin Capital kind of annual report about, summarizing the year ahead and talking about Solana as the internet capital market. It was just it's very clear. The vision is very clear. It resonates with me exactly because, and I think people have commented on this thing quite recently about, what blockchain is and what blockchain isn't. To me, it's clear. Again, I think it's probably because I come from a finance background. To me, it's always been like blockchain is meant for finance. Even things like, like NFT meme coins, that's one way to on-ramp people into financial literacy. It's always about having capital and to have like buyer seller trying to figure things out. No matter what the use case is, it's very much strictly finance. So I think when Solana, push out this narrative of we being the internet capital market and having a very clear vision rather than, we're doing gaming this and that, and including finance, I'm like, this is exactly the right approach. And I would love to be part of the team. And I think they have went through many cycles, which is also interesting, right? It's like battle tested, if you will, and also especially it was a hard recovery for the entire ecosystem post the FTX, and the fact that they came out strong and very clearly becoming the de facto after Ethereum, it's just incredible. And I really want to continue to contribute towards that journey to get to the internet capital market vision.
And one of the things you mentioned in some of that was some of the confidence that institutions have gotten around public blockchain specifically. And I'm actually curious if you can point to any catalysts from your perspective while you were sitting at Visa or otherwise that signaled to you that crypto infrastructure was ready for what I would describe as prime time from an institutional perspective. There was the scalability and so forth there to be able to facilitate institutional use cases. Is there anything that you would point to and say, that was a moment or a catalyst, or it's when I realized things had sort of shifted in a major way?
I think for me, the moment was around 2022. So there's several news around that time that was like very indicative of what's about to happen. So at the time, there was already things like Project Guardian taking place in Singapore. So with the Monetary Authority of Singapore, they run these, annual events and I guess projects. So one of them is called Project Guardian, and I remember that was back in 2022, and JP Morgan, the Connexus team, together with DBS and a bunch of other banks, have done tokenized deposit essentially, and they were doing an on-chain FX swap, which is really cool. I think they were tokenizing yen against something else, and they did it entirely on-chain. It was interesting, but it demonstrate, right, already at the time. And by the way, they did it on a public chain, I think is on Ethereum. So it just says, okay, institutions start to get, like, it's about the technology, it's about the infrastructure, that you can do something that could never be achieved in traditional finance, i.e., in that particular case, it's the atomic swap feature that's very unique about blockchain. Now, the other signals happening also around that time is you have, I think, Fidelity and BlackRock are probably the two first, and Franklin Templeton, I think the first three asset managers starting to tokenize treasuries on-chain. What is really indicative about that movement is, first, this is not just a POC, it's actually like issuing real money market funds on-chain. And second, 2022 was a bear market. It was in a very bad, like, regulatory environment in general. And they decided at that point they want to go become serious. And even at that point, credit to BlackRock, like, they've been saying that, we think blockchain is going to be the one tokenizing, everything in the world. And what's really interesting is, like, why did it all happen? Because 2022, again, the macro environment is we're in a really low rates environment, right? It was still, like, I think quantitative easing or something like that. And hence, you have this massive pool of liquidity in crypto market, which is really like 250 billion of stablecoin earning nothing, essentially. And that's just not good enough. Whereas you have these much safer assets that you can bring on chain and you can attract the crypto users, which is a net new use case, by the way, for a lot of these TradFi, because now they're expanding that distribution effect. Instead of figuring out how to replicate what TradFi can do, they actually bring some existing product to crypto because the new user base are the crypto users. So that is really interesting. And I think, knowing how much liquidity and users are going to stay in the blockchain ecosystem, this is a real, like, net new business revenue for a lot of the payments financial companies to tap into. And hence, for me, those are the real signals that I'm like, is different. It's no longer just blockchain, it's just kind of a POC, but, institutions starting from the private sector start to take it seriously. And I think that also translated back to the central banks, because as I was still kind of covering the CBDC land, it was very clear. Earlier, 2020, everyone is talking about retail CBDC. But all of a sudden, starting 2022, the conversation shifted to, well, let's think about tokenization, right? Let's think about central banks staying in the wholesale segment, focus on maybe wholesale CBDC, as the current financial market infrastructure is, except tokenizing that central bank money on-chain, but still wholesale. But then the rest of tokenization is really about the private sector, how they can tokenize all of the financial assets. So all of those combinations are really good signals, I think, for the entire crypto industry.
And I do want to cover a little bit about your scope at Solana in your role. What does it cover? How do you think about, sort of the constituencies that, you're going to be spending and are spending a ton of time with? And maybe also just helpful for the audience who may not be as familiar with Solana as, sort of an organization, as a foundation, a little bit on how it operates. From our interactions with the foundation across a variety of different vectors, it seems very lean as an organization. And there's, I think that's something that a lot of people don't know. So just curious if you could layer that on as well as you think about the role inside of the organization overall.
So Solana has been around for quite a long time, and as I said, it's been battle tested. And to your point, the size of the foundation itself is relatively small, certainly less than 100 people. And I think the goal is to stay hungry, stay lean kind of mentality, which I love, to be honest, because I do think to be competitive in this really competitive age, you gotta do your best. Solana, I think majority of the people by now know who Solana is, because other than the EVM paradigm, you have the Solana virtual machine paradigm. I think it's funny because in some of the conversations when we talk about Solana, the repeated theme about hurdles that are presented to the institution are very much coming from a technical standpoint. So on Solana, you use Rust, right? Like that's the kind of the programming language you use as opposed to Solidity. And it somehow is deterring a lot of institutions. But I do want to point out also on this podcast, right? Rust is like one of the most used programming language, period, that exists much broader than the blockchain ecosystem. You have like 200, not 200, sorry, you have over 2 million developers in the Rust community versus like, I think less than 100,000 like developers in the Solidity ecosystem. So just to put that into comparison, I think Solana, what's really best known at is really for its performance, and I think that has always been the sort of the edge of Solana. In fact, what drew me to Solana in the first place is really about the technology and innovation. In fact, I think they have been very focused on a lot of these super high performance like capabilities, right? Because they want to attract these use cases, whether it's trading, whether it's perps, like prop AMMs and stuff like that. And therefore, to deliver those results, you need super fast, like TPS, transaction per second, high throughput and low latency, and also very fast finality, because finality is what matters to institution, not just like optimistic confirmation. So Solana is a very clear leader in all of that. So right now, I think the confirmation time, or like the settlement time on Solana, is in the range about 400 to 500 milliseconds, which means typically a transaction will be finalized and shown on the mainnet within a second. Now, with some of the latest network consensus upgrade happening on Solana, which is called Alpenglow, that's going to be reduced even more. So from the current 400 milliseconds to just 150 milliseconds, that's a huge improvement. And again, I think that matters a lot as your financial institution trying to get all these super fast performance and resiliency. Together with that is, again, coming from the Visa perspective, I know like having performance, having that security matters a lot more than anything else as the first premise. So I think that's what Solana is good at. And I think in terms of my remit, in terms of like looking at what I can contribute to Solana, so my focus area is very much on the institutional side, whether that's payments companies or like asset management or banks or anything in between, I suppose. That's kind of my coverage area to understand how can I help to facilitate more enterprise, more financial institutions to come and start building on Solana. What are the hurdles, for example, whether that's on the technical side or whether that's on certain features. So just to give a good example in terms of what we're really focused on right now is on privacy. And I think that's not a net new thing to anyone, right? Because privacy has been a repeated theme, but it got really heated up going into this year. And I think it makes sense just because, again, we're no longer doing POC. You actually have real transactions, whether that's a B2C, B2B transaction happening on chain. Clearly, institutions want to ensure those are private transactions rather than anyone on mainnet can just track through, whatever you're spending or how much you get paid. So that makes a lot of sense. And I think part of my job on what I'm trying to do is like house cleaning and sort of connecting the dots, if you will, because there's lots of like cool protocols already happening on Solana. It could be just developed by someone from the foundation, it could be from like Anza Labs or something. But it's like, it just happens. And it's hard for any enterprise coming into Solana to kind of like, okay, I know the map of Solana and I can kind of figure things out. So for me, and again, the role of foundation is what kind of public infrastructure, public service can we provide such that we can promote the growth on Solana network overall and also help to connect directly to our ecosystem partners. So again, going back to privacy, exactly what we're doing. Well, firstly, we have something that's natively embedded into the smart contract that could allow confidentiality, right? Confidentiality means like the entities of the sender and recipients are known, but the amounts, the balances are hidden. And this use basically ZK proofs, bulletproof to be very precise, algorithmic encryption to achieve that. So we are enabling that directly on the mainnet. So imagine you have Alex is sending me like, I don't know, like $1,000 of USDC. You can in the future hide it completely, except we know it's still between your wallet address to my wallet address, but the balances are hidden. And the beauty to that is there's also a pair of auditor keys that they can then use to decrypt that. So whoever the auditor should be in that scenario, they'll be able to look through the transaction if it's needed. There's a lot of really cool things about why that's really important, because I think the best feature on Solana is around liquidity. So the more we can do to promote different new feature development directly on the mainnet, the better, because the whole point is you want to have the best of both worlds, i.e. you want to have the liquidity, but you also want to have either its privacy, permissioning, controls. So how do you achieve that balance is important. So beside that, what's happening on the smart contract level, we're also developing new protocols, something called Contra, CONTRA. That's another option, another like privacy design you can create, which is basically a payment channel that can sit directly on top of the mainnet. So a user wallet on the Solana mainnet can send money into this payment channel, and then all the activities inside the payment channel is completely hidden from the mainnet purview. And then when you're done in that payment channel, you can come back to the mainnet and vice versa. So those are, I would say, just some flavors, if you will, that we're offering to institutions. The point, I think, from my perspective of what's valuable is all of these things are very modular, because privacy is a very customizable, like personal experience, if you will, for financial institutions. And so it's hard to provide privacy in a box. It's like, I give you this thing and it will just work perfectly for all scenarios. I don't think that frankly exists. So to us, it's super important to be modular, such that, if you're Franklin Templeton of the world, there might be a very different privacy requirement versus if you're, say, HSBC of the world. And that's what we're trying to achieve.
One of the things you highlighted, and you and I discussed this previously, is when you think about success as it relates to institutional adoption on Solana specifically. I mean, we talked about, one of the big gating items that a lot of people don't really think about is liquidity and depth of liquidity. I think a lot of folks look at TVL being, sort of a big sort of indicator of, how much value there is, but there's also a question of how much velocity is there around a particular set of assets on a particular chain. So when you think about success in your role from an institutional adoption standpoint, are there specific KPIs that you look at and you say, like, those just have to be there in order for this to be self-fulfilling in terms of the institutional adoption? And are there specific maybe metrics that you say are better indicators of that versus others?
Absolutely. I think this is a fantastic question. I think TVL is one of the metrics certainly we look at, but I think it's important for us as well as for any clients of ours to realize TVL is fairly limited in terms of what it can really show, because TVL just shows how much is being logged, right? It's like how much asset or wealth you have, but it doesn't show how quickly it moves, because what matters more than that is the velocity, and that goes back to liquidity. You want that money to be constantly circulated, to be constantly used, because only through transactions can you generate value through the network. Not just for Solana network itself, but actually for all the builders, developers on Solana. That's how you can realize your revenue apps. Revenue coming from these apps. So that is something we actually track a lot more in terms of the velocity and how quickly those money moves. And so as an example, I think as of end of 2025, we processed 1.5 trillion of the DEX volume, right? So that's an interesting metric because it's telling in terms of like how active the entire network is. And again, that is why it's correlated to the app's revenue, because you have a very high velocity, very, very active chain, which by design, it generates a lot more revenue distributed back to all the participants on that network. So I think that's a really important thing we track. I think outside of that is things like, the performance metric, as I said, is constantly very important. Like downtime, there hasn't been any downtime for the past 2 years, which has been fantastic. And hopefully, we can continue to demonstrate the resiliency, because to me, it's a super, super important thing if we want to match all of the existing TradFi ecosystem kind of performances. So I would say those are kind of the key KPIs, if you will. I think the other thing is also just in terms of stablecoins specifically, we want to be, I think we're already leading in terms of the stablecoin volume, but we really want to be the most dominant chain when it comes to stablecoin, because stablecoin in itself represents liquidity, which then will lead to other use cases. So to the extent that we can work closely with all the stablecoin issuers, help to really drive real use cases, those are going to be super important for us.
We started to crack open this question earlier on how you view the competitive landscape for institutional block space. You mentioned, sort of I would say the zeitgeist argument of Ethereum versus Solana versus, what have you, those being sort of the two key ones. But when you think about the competitive landscape and when you show up to talk to an institution, is it and? Is it an or? Is it a, how did they think about that sort of decision-making process on which chains to interact with? And what's that matrix look like from an institutional mindset standpoint?
Coming from Visa, the mindset is very clear in the sense we always want to be multi-chain. And I think that applies to many different other banks or financial institutions as well. However, realistically, multi-chain doesn't mean you will be present on every single chain because there's like hundreds of chains out there. I think, we're still in a massive like protocol war or whatever you like to call it. But I think down the road, consolidation will have to happen. And it's interesting, to be honest, to see more like even as of this year, you have newer L1 chains being created. Regardless, I think consolidation will happen in the medium term. And I think, probably I can see they're going to be a clear top 3, max 5, but I can't see beyond that just because economically it wouldn't make sense. Because if blockchain really become the future of financial infrastructure down the road, you need consolidation of liquidity in order to make things work. So I would say right now competition is still very fierce because lots of people are competing on the tech side, right? Like I've mentioned about 150 milliseconds down the road. I mean, I guess the floor anyone can reach is 0. So how do you like really hit that instant? I mean, high frequency traders have done in the past. I wouldn't be surprised there's going to be certain blockchains where, even if we look at, say, Hyperliquid, right? They've been like fantastic because it's a very different design, it's very centralized, but they've done a pretty good job for whatever use case they're trying to serve. So I would say there's still a lot of competition coming from different angles in the sense, as I said, Hyperliquid might be coming from more like a trading perspective. There's other chains coming, say, on the payments, on institutional, and so on and so forth. But I think also from an institutional perspective, it might be kind of like overplayed, but it is important to figure out what is the real signal from the noise. The race has already started. That's my point. It's kind of pointless to evaluate every single chain from like a starting point, if you will, because as I said, things like liquidity, things like the network effect just takes time to build. There's no cheat sheet that you can just like get faster to market. As you know, you're building a company yourself. Like it doesn't matter how much money you've raised, and we've seen that in the past. You can raise lots of money, you can bootstrap the network, but to keep people staying in that network and to really use that thing takes a lot of hard work. And so that's why I'm saying the race has already started, and Solana right now is a very clear winner in many different use cases. So if we can stay on edge to compete, I'm very confident that this will help with a lot of the competition, but also this is where the signal, right? You're looking for alpha, whether you're a trader, whether you're a payments company trying to pick what are the top 2 or 3 chains you want to provide. I mean, that's the real alpha as you're looking at the real use cases, the KPIs and stuff like that. What are the real indicators that show you actual use cases, not what you promise, what other people promise you is going to deliver? I think that's going to be crucial.
You talked about privacy. We talked a bit about throughput, cost efficiency as it relates to Solana's core value proposition from a technological design standpoint that has obviously practical implications. How do you anticipate some of the value proposition for Solana in the institutional vector evolving? And so there's sort of today there's like a need to have liquidity, you need to have privacy, you need to have high throughput, you need to have cost efficiency. You just have to have those things to be what I would describe as like economically viable in a financial services context. But if you were to look out, let's call it 24 months and beyond for how that core value prop needs to evolve to match the needs of institutions that are going to come in from sort of the margins into the ecosystem, how would you articulate that?
Again, me being a newcomer to the Solana Foundation, I would say I have a fairly neutral perspective of what we're good at and what we're not good at. So I would say what we're winning is definitely on the liquidity side, on the ecosystem as a whole, right? Because I think everyone who comes to Solana recognize the fact that we have the deepest liquidity, the most active chain, and also I think even from a developer ecosystem perspective, it's actually now overtaking Ethereum, which is a big feat. I gotta say it, just because Ethereum has been longer than us for a long time. So to take over that is not an easy thing to achieve. I think what Solana needs to work on, this is what I'm spending a lot of time, are things like privacy and other guardrails in which institutions are looking for. Because I think Solana started as a point. It was not intended for institutional use cases. It's a general purpose chain, and it had a lot of success with DeFi, with developers, right? But when it comes to institutional requirements, i.e., do I have certain standard that can satisfy KYC, KYB? Can I do permissionings? Can I do a liquidation mechanism like risk management, etc.? I think these are kind of the new specific institutional requirements that now need to be layered on Solana to make sure that it's really kind of robust or enterprise grade. It is, but I think it's just, one is just in terms of awareness and education to really show people what we actually have that they might just simply not know. But it also is just when it comes to specific client design that we support, we'll have to make sure these are being designed in a really, really good way. So I would say those are the things that, yeah, like we will be spending a lot of our time in 2026 to be working on.
You dovetailed nicely into what I was going to ask you next, which is when you arrive at first or second conversations with an institutional prospect, what's the biggest misconception about Solana that you find that those institutional prospects bring into the conversation, either as preconceived notion or like just like intellectual baggage?
We've talked about this plenty, but like the biggest misconception is like Solana does not have privacy, and I'm like, that's just not true. It does, but it's just, first, we haven't done a good job in terms of educating, but also like there's a lot of different design modules that we're right now developing that can really serve the purpose. So as I said, one is on us. We need to do better in terms of the actual offering, but also it's just in terms of the education awareness. So that's one thing. Solana does not have privacy. That's the biggest misconception. Number two is probably just like this notion that Solana is known for being a meme coin chain, a meme chain or something like that. I think it misses a lot of the point. And I've been talking this internally and externally. Yes, meme coin has played a very big part in the Solana journey. And actually, we're grateful for that. Why is that? Because this whole thing happened actually after the collapse of FTX and stuff. And that was probably the lowest point that Solana has been through. Has it not been because of meme coins, like people like Bunk and others coming to chain, having faith that this chain is still viable, we'll never have the liquidity we're seeing today. Meme coins, the actual channel, the funnel that brings a ton of retail liquidity into Solana. And you can argue, what is meme coin all about? Well, meme coin is a way to introduce financial literacy to many people. That is one way to understand, these prices, they move. You need to understand how you trade. You then need to figure out what's your wallet infrastructure, what's your trading strategy, etc. And then you can start looking at DeFi ecosystem, etc. So instead of like thinking, oh, meme coin is bad and stuff, I think this is what makes Solana unique, because going back to, we talk about liquidity, right? One thing is like, yes, we can compete on the scale and the sheer size. I think the other really important thing is on the diversity. What is the profile inside that liquidity? If all the entire liquidity is entirely TradFi, like institutions, there's not much interest in that, because Swift already has massive liquidity. They have all the financial institutions on that network, but it doesn't tap into the retail. And that's exactly the point. I think on Solana, you have both the richness of the retail side as well as institution, which makes both kind of sides interesting, right? Because you want to have the diversified profile. So I think that's the other misconception, that meme coins is bad and therefore like, when are you going to kind of switch over the image or not? To me, it's like that has signified a portion of the Solana history. And we're grateful, because has it not been because of the case, I don't think Solana will, come back strong like the way they have done.
And I think to that latter point, there's always a branding and a perception sort of component that is always organically evolving, right, over time. And so I think Solana's done an amazing job of this over its history in terms of both, like, it's hard to name a brand or a community that's, been fused together in a way that's been highly compelling, especially over the last sort of 24 to 36 months. I think it's been pretty incredible. When you think about how the current product roadmap is set up, how would you describe what it's optimized for? And what I mean by this is there are certain, sort of roadmaps that are optimized for, we want more developer growth, we want more institutional adoption or institutional capital, we want more consumer adoption, or maybe some other type of, sort of thing that's optimized around. How would you describe that for Solana specifically? I know you're geared towards institutional adoption, so I'm going to guess that that's where you have the most to say. But I'm curious, writ large, Solana, when you think about sort of the global roadmap, are there sort of like competing priorities, or is it all sort of like very neatly sort of designed to work and row together in sort of a singular direction?
Yeah, I would say we want all of that. It might just sound a bit greedy or whatever, but I think I like we have really good talents and people who are real subject matter experts in these different kind of swim lanes. I don't think why we couldn't just because, we have as good a technology, as a good of a network as anyone else, and hence we have a good chance of competing. And I think the things, whether it's coming from consumer side or coming from the institutional side, they're equally important. Again, maybe Solana has been stronger, more so on the retail side. So now we need to, step up the game more on the institutional. Not to say we haven't, but I just think, as I said, how do we attract more banks if they want a permissioned environment or such on a public chain? How do we really cater for that kind of use cases, which is interesting. But yeah, I would say a lot of the things you've said is important just because Solana is positioned as a general purpose chain. And I know it's hard to achieve, but if you really think about what blockchain is meant is that open neutral infrastructure, it's going to be the same blockchain infrastructure you use, whether it's for like your clearing and settlement versus your banking need down the road, on blockchain. And hence, how do you cater for these different, very diverse groups is a challenge. And hence, I think, we are going to try our best to tackle all of that front.
So I want to pivot to another area where you have, I think, very deep expertise and probably one of the foremost people in the world to weigh in on, which is payments specifically, and what the future of the payments market looks like in wake of not only stablecoins, but also more broadly speaking, sort of the new rails that we're seeing utilized for payments. When you look at the traditional payment space, are there particular portions of the value chain that you view as being particularly exposed to disruption in the next 12 to 18 months due to the evolution of stablecoins, or do you sort of categorize it as it's an opportunity for some of these portions of the stack?
It's a great question. I think it's quite hard to answer in the sense that it's so complicated, right? Because I think, Visa has done such a fantastic job doing what it does for 60 years. Of course, it's like the most obvious target for many innovation with disruptions, thinking about it. And I think the areas that people want to attack the most is obviously where you have a lot of rent or economics that you can extract from, and how do you reduce that cost therefore. So specifically, when it comes to, say, like a really good example is merchant acceptance, right? It's like, well, in the future, you don't need card, you don't need processor or banks involved. You can just directly have merchant getting these stablecoin wallets or just whatever digital wallet they have, and then they can directly accept stablecoins. That merchant doesn't need to pay Visa or anyone else in that chain any fees. Now, the trade-off to that side, and this is what Visa is doing a pretty good job at least for now, is like, well, there's much more value added to that whole conversation than just merchants not paying the fees, because you have chargebacks, you have protections, you have all these fraud and things. These are value-added services that make this whole thing sticky. So it's hard to anticipate. I don't think Visa is at a massive risk, like in the very short term, but technology is not going to stop. And I think I think it's this week, right? There's this Citrinese research report coming out, and it was like a big shock on all of the existing kind of Web2 enterprise companies. I don't think anyone should just brush it off and just be like, this is, overreaction of the market. It does say something, because we're talking about in a broader macro context of having AI, agentic payments, agentic this and that, as well as stable coins and so on. And hence, I think for a lot of the legacy system, it is sort of that innovator's dilemma. How do you really, truly innovate? And what kind of portion of your existing legacy part are you willing to sacrifice for the longer term vision that you think you can then stay competitive? That's why it's not an easy question to answer, because being at Visa, I know we've done a fantastic job of, say, doing things like stablecoin linked cards, because as part of that, you sort of bring the Web3 ecosystem back to Web2 because you make those money spendable, right? And you, as a user, you enjoy that experience. So again, user behavior is quite a sticky thing. I don't expect that to change even within a decade. But our next generation, what does that look like? Who knows? Because I know my parents' generation, they used to use traveler's check, and then there's credit card.
Yeah, and I think the other thing that folks don't appreciate is sort of just like brief history even. I mean, I think the last really big innovation wave that hit the, sort of the card companies, the credit companies like Visa and MasterCard was really the open banking platforms, where there was a very much a risk of those card networks getting out of the flow of the transaction, so to speak, and both in terms of their understanding of the users, understanding of the spend, all of these other things, right? And ultimately, there's a huge component of both Visa and MasterCard's business that is data and analytics, right, based on the usage of their card networks, right? And I think that what blockchain and stablecoins represent is another means or paradigm now of some of that type of spend information happening outside of their network in large quantities. And so to your point, I think that there will be, moves made to, again, counteract and or embrace, sort of that existing or new set of paradigms in an interesting way for sure.
Yeah, absolutely. And also just thinking about it, at the end of the day, it's all down to people. And that's what differentiates one company from another. Two companies might have very similar ideas, right, in whatever it might be, but it comes back to execution, and the execution comes back to the individuals who are all working collectively for that thing to make it work. So technology is one thing, and I am bullish about technology, but once you start working on that every single day, and I know you feel the same, it's like every single day that progress you make and what priority you take, and therefore how fast everything can move as a whole. There's still a lot of really high promises, I would say, in blockchain, but we haven't got there. Why? Because I think it is to do with execution, focus, strategy, all of that competing factors. And it applies the same to TradFi people as well. So yeah.
I think it's the human element. It's human behavior. Having to learn a new sort of user experience, a new thing is takes time, right? And that adoption curve has gotten faster and faster and accelerated over time. But I think fundamentally, what's most interesting about digital assets blockchain is that it's fundamentally, I think, less of a UX innovation, and more of a settlement layer and infrastructure innovation, right? I think in a lot of cases, people will not know that certain services are being run, settled, or so forth on blockchains, right? Ultimately, in terms of the user interface, and so that's another thing that's a bit silent about the innovation cycle. Maybe just because I can't resist that there's a lot of talk about agentic commerce, AI, and where that intersects with stablecoins in particular and blockchain. From my perspective, it's a very unique, set of technologies as it relates to there will be interactions between agents and being able to move value, compensate one another, and so forth. Feels like stablecoins is like the natural sort of vehicle of value, so to speak, in that scenario. I'm just curious how you see sort of AI agents either accelerating or sort of changing the way we think about stablecoins or other types of digital assets.
Yeah, I'm glad we obviously be on a payments podcast. We gotta touch on agentic side. Like at the foundation, we are super we're tracking this very closely, and we're just super invested into that future. And as you can also see from the sort of the on-chain activities, majority of the X4 to payments right now is happening on Solana. So that's really cool to see it. Now, I want to throw some contrarian view in the sense that I think at least for the time being, this is still a shiny thing. I don't see that as being driving real economic value. Yes, people talk about micropayments, but realistically, how big is it? How many people are using it? I'm not seeing a lot of that. So, but not to say it's not good, because I think it's really important we have this playground to start testing, to have more innovations, whether it's lobster cash or whatever that might be, right? We need to just purely start testing and discovering more use cases through that process. But yeah, I mean, I think what would it take? Like long term, I am fully aligned in why it would just be a perfect marriage between agents and stablecoin, because agents have no problem reading smart contract, executing smart contract, and stablecoin is essentially programmable code. So the two are like perfect synchrony, and it's interesting how stablecoin is created completely independently from agents, but you see a lot of the overlaps down the road. I feel like if I were to predict anything, it's like I think agents could probably be most applicable in terms of first real set of use cases you implement them might be in more like portfolio management, because in portfolio management, since I come from a hedge fund background, especially when it comes to quantitative trading, there's a lot of rule-based things you can design. So it's very well defined mathematically of how do you implement a long short strategy, delta neutral, whatever. And I think agents are very good at doing that. What agent today I don't think is very good at is, oh, book me the trip to Miami and figure out all the hotel, restaurant, just book everything. It just definitely hasn't got there yet, right? So from a retail user perspective, I don't think is actually going to happen first. To me, again, this is just my personal hot take, if you will. But I feel more interested when it comes to portfolio management, whether even just from a hedging perspective or just them being your atomic kind of portfolio manager to design and how you allocate across a defined set of things. They can totally do that today because it's just rule-based things. And it doesn't even need LLM. It's just, rule-based system that you can implement. And that's what we're already seeing. So.
And then Catherine, I'm curious, just as a closing question, when you look at the next 12 to 18 months, what are you most excited about at the intersection of, institutional use case and digital assets?
So firstly, I think we're going to have some cool kind of innovation product launch happening like in a month's time or so, that we want to make it a lot more accessible and easy for Web2 enterprise companies to come and build on Solana. So think about what we can build as, I would say, public infrastructures, right? Because we're the foundation, we're trying to do the public good side of things. Infrastructures that can make it much more easy for a Web2 company to adopt. So what no-code kind of environment is what we're trying to create, such that it can aggregate the best of Solana into this single thing. And then as an institution you come, you can build your business logic directly on top of that. That is something I'm really excited because we're very close in getting this product launched. I'm super excited to see how institutions will use it in their own toolings and stuff to start building more stuff on Solana. I think the 12, 18 months roadmap, as I said, I think privacy is a big focus area of ours, and I think it's super important to get it right? Privacy is not easy. Privacy is something everyone has been talking about, but different use cases, different needs, and also regulatory requirement isn't super clear today. Like what exactly is required on privacy? It's not like compliance and stuff. Privacy is actually a gray area that hasn't been defined. If you look at Genius, it doesn't mention anything about privacy. So how do you achieve the right balance and working with different banks and institutions? I think that's a kind of a big area. There's many other cool things coming up. So hopefully coming back to your pod or something in the future, we can say more. So yeah.
Well, absolutely. We'll park it there, and then we'll hold you to coming back for another episode to talk about all the progress that's been made. With that, we'll end it there. Catherine Gu from Solana Foundation, head of product for digital assets. Thanks again for coming on, Catherine. It was really great to have you.
Thank you so much, Alex.
Absolutely. That's a wrap on High Stakes, the podcast where Web3 meets the real world. For more insight into how blockchain and AI are reshaping institutions, head to validationcloud.io and follow @validationcloud across all socials. Stay tuned for more conversations from the front lines of innovation. I'm Alex Nwaka. See you next time.